All right, team. We are live on YouTube. I see that we're setting everything up for the meeting. We'll probably have a little delay, but that's all right. Um, for those of you who don't know my man Ryan, he was with us late last year to talk about
Yeah.
taxes and all the fun stuff. And we've got rave reviews from his last session. So I'm gonna bring it back to start the year right since we're in tax season. And I'm gonna definitely, get everybody going here, and let's make it work, as they say. So, Brian, I'll let you introduce yourself again, just in case for those who don't know you, and we'll go from there.
Yeah, allow me to reintroduce myself. I always think about that whenever I do that. I'm like, my name is Hove. But that's
Yeah,
not me at all.
I
Not
thought about it
JC.
right when you said it.
I know, right? I do it all the time, and some people don't catch on to it, but it's hard. So it's like one of my favorite lines to use. But yeah, so reintroducing myself, my name is Ryan Kaysen. I started running a CPA firm when I was 20, became a partner in a CPA firm at the age of 24. My background is predominantly real estate taxation. I'm also, when it comes to real estate, my buy box that I usually look to that I'm involved in is usually your syndications and also commercial. I say both of those because at this point I feel old and lazy. I don't have as much energy as I used to go out there and hustle. I've also done single families and done some more investing, even down to oil and gas. So for me, my passion is passive investing of any sort, mainly because I like passive income for my tax purposes, but also just for my cash flow. And so over the course of time, I've helped over 200,000 real estate investors and also business investors make sure that we kind of keep them on the right path with taxation. I'm based out of Salt Lake City, Utah. We deal with all 50 United States. So if you're in New York, New Jersey, California, wherever you're at, we've dealt a lot more with those states than we have with our own. So with that being said, I kind of jump into it and just answer some questions and provide some directions here for Harold's group. Anybody at Harold Mentors, we also do consults just to make sure that we're kind of getting you on the right path with your LLCs. And so tonight we're going to have a little bit of a conversation that's going to be geared towards when to treat your business as a hobby and when to treat it as a business, right?
Nice.
And so we're going to break it down. The first thing I like to do, so with that being said, Harold, I'll just kind of jump into it. The first thing I like to do with any business in the beginning of my year or the beginning of the year is I like to say, if you're going to like, don't treat anything like a hobby. If it's a hobby, great. That's cool with me. But a lot of times with real estate, we're not going to treat this as a hobby. This is something that we're going to be geared towards, that we're going to love and thrive for. With that being said, one of the biggest things of not treating your business as a hobby is to no longer like make sure that you are incorporated correctly. Make sure you're doing your LLCs correctly from the beginning. I'll go ahead and say this because I know Harold and his personality. One of my biggest fears in real estate is my crackhead cousins. Y'all, crackheads, they scare me. I'll go ahead and say that, especially as a real estate owner. So the last thing I want to happen is somebody to walk around and throw a brick through my window and then them to hit one of my tenants. At that point, I'm in double whammy. Number one, I got my crackhead cousin on my property who now knows I own it. Number two, they hit one of my tenants and I got a lawsuit on my hands. I don't want that to happen. So what I do from the beginning is I set up all my properties and all my real estate within LLCs to protect me from lawsuits, to also protect my anonymity so my cousins can't find me, and number three, to lower my audit risk. Statistically, you cut your audit risk by more than in half just by having an LLC established compared to a sole proprietorship out there floating. And so, one of the big things that we do here at Prime when we get you guys set up is we just make sure that we initially get you guys set up as an LLC and we do a consult to make sure you are structured correctly on that. So that's something that we do is complimentary here with Harold's Group. We do charge, of course, for our hard costs on it, but we do it just for usually your state filing fee, and we'll walk you right through it to establish you and protect y'all from the crackheads from the beginning. So crackhead
You gotta be
cousins.
you gotta be protected.
Yeah, you got me protect. Yeah. So that's one of the first things I hit on for y'all. So for everybody listening to this, just make sure that if you hear from us or you engage with us, new so that's going to be our first order. Because I could tell you my biggest fears is I want to save money from people, which that's why I have LLCs, and I want to save money from the IRS, and that's why I do my tax planning. So with that being said, I'm going to jump a little bit into tax planning for y'all, and I'm going to teach a little something tonight that I haven't taught on this Zoom yet, and I'm going to actually I came up with the visual for it, and I'm going to walk y'all through it. So this is for anybody who basically likes. This is a deduction um, that I like to exploit, and it's a little bit more advanced than a lot of other deductions here for y'all. So I'm going to start off. Hey Harold, can you let me share a screen for you?
Oh
I'm
yeah,
gonna
yeah. I mean,
yeah, I got you. I'm gonna start off with more of an advanced tax deduction, just to grab people's attention tonight, to keep people engaged here, just so y'all know about it. So with that being said, the thing I'm gonna go over is a rule that is based on a golf course, but it's really not based on anything else. It's called the Augusta rule. So I'm gonna explain this to y'all
oh,
and
I
kind of
love this one. I love this
how
one.
this makes sense for y'all. So Augusta Golf Course, I don't like to golf. I didn't grow up in an area where we had golf. We had basketball, baseball, football. So that's all we had. We didn't have this golfing thing. So for me, I know golf's never been appealing. I played way too much baseball, played too many other sports. I just don't enjoy it. Now, with that being said, as a person who doesn't enjoy golf, I enjoy a rule for my taxes based on golf. This is called the Augusta rule. There's a golf course down in Georgia, Augusta Golf Course. There's a bunch of wealthy houses around it, a lot of rich people there. Basically, if you guys haven't discovered, rich people make your tax rules. That's what they do, that's what they know. And so, with that being said, the Augusta Golf Course, the residents around it, they came up with a plan saying if they rent their house less than 14 days, they don't want to report their rent on their income tax. And IRS said, sure, we'll let that pass. And they do. So now everybody has to let it pass. What this means is for me, and you can see I'm in my home tonight, I legitimately rent this home. I live really close to ski resorts. I rent it to my business for my board meetings. I rent it to my business for under 14 days. The average cost per night in my area is around $550 a night. You could do the math. 550 times 14 nights is a lot of money. So for me, I instantly create myself around a $7,000 to $8,000 tax deduction by renting my own home to myself for meetings for my business partners or anyone I'm hosting about business. I'd gather the fair rental rates in my area. Well, I do this through Airbnb. There's a hotel down the road that's nice. I call that hotel and see what their nightly rates are. And that's what I base it on. And I did at the end of the year, I issue myself a 1099 for my rents. But the great thing is I don't pay taxes on it because I'm excluding it because I rented my house for less than 14 days. And yet I get that tax benefit. It's an additional $7,000 to $8,000 tax write-off that I'm personally not paying taxes on. So,
Now, just for a hot second, I want people to make sure this don't go fly over their head. I want you guys to understand this. If you picked the way he said, he got a write-off for his business, but he didn't have to generate any taxable income from the rent that he rented to himself or to his other entity, essentially. So
yep.
he got a double whammy, 2 for 1. We'll call it 2 for 1 special, essentially.
Yep. That's one of the biggest things. That 2 for 1 special is what you want. Another 2 for 1 special, hiring your kids. Hey Lucas, come here. Lucas, come here. Let me show y'all something. Come here. Say hey to my friends. This guy right here is 4 years old. He's not going to do a whole lot for my business. Say hey, Lucas.
Hey.
See, there he is. So anyway, Lucas here, I won't hire him to do anything. As you can see, he's just got an iPad and he's chilling while dad does a Zoom. With that being said, I tell everybody in real estate, one of the things you do if you have a lot of active income or if you have income, you could hire your kids. Number one, they can't be 4 years old like that guy. They must have a real job. You can't have them doing household chores. So for me, my older son, as soon as he hits 11 or 12, he's strong. He's strong as they come. I'm going to have him out there hucking lumber and cleaning up job sites for me. I'm then going to pay him. I'm going to pay him up to $12,600. The reason why I say that number is because if he makes less than $12,600, my child doesn't have to file taxes. But what I do as a business owner is I write it off up to $12,600. This is another double whammy. Now my oldest, he's really into skiing. So guess what I'm going to do? I'm going to pay him money. He gets the money, but guess who's going to buy his own ski pass now? My son. So then I get a benefit of him buying his own ski pass. I also get a benefit of taking his deductions. And that really is also another that's a double whammy, Harold.
There you
So,
go.
yeah. We'll cover some double whammy deductions tonight for everybody. This brings me to another one. Let's talk a little bit about vehicles. It's a double whammy. Again, guys, all of us, like a lot of people have champagne taste on a beer budget. Don't be that person. You need to have realistic taste on your realistic budget. That's what I want to encourage here. I love vehicles only for one reason. I don't care about my vehicles outside of this. I love vehicles when I get to deduct them. So right now, I have a vehicle. So I had a great year. I went and I purchased a vehicle, and I primarily use it for my business, number one rule, and I was at a profit number two. I have a vehicle that was, let's say it was $60,000. I'm at a 30% tax bracket. My easy math on that is I have a $60,000 vehicle at 30% tax bracket. I do 60,000 by 30%, and I saved $18,000 on my taxes for my vehicle. Now I still have a $42,000 vehicle, but I saved $18,000 on it because that's what I deduct. I deducted the total vehicle from the cost, and that was a deduction for me. Keep in mind the vehicle must be used mainly for the business. And number two, you want to have that also your business at a profit. So notice I didn't say you need to have insurance in your business name or it needs to be bought in your business name. You don't need to purchase it in your business name and you don't need to have the insurance in your business name. The reason why is your insurance will triple or almost triple if you put it in a
Yeah.
business name. That's how they get you. So you can still write it off without the business being in your technical business name. So there's a trick.
Good to know.
Cool. Also, another thing, if I'm having a good year and I went out flipping, and let's say I've flipped a lot of properties. I've done this before to where I actually have this happening right now. I have a property, and I'll tell you guys the comps on it and everything. I got a property at $515,000. It's newly renovated during COVID, and then the company pulled remote. So I bought a commercial property at 515. It was a nice property. I love it. It was in a good area. It's in a great area. So with everything in real estate, location, location, location. And I was like, I can't pass on a newly gutted, revamped building, the best office building in the area for 515, still of a deal. The gentleman just wanted out of it. It was an offer that was an off market deal. And so for me, it was great. I went in and we purchased property as a group. Well, now I'm like, hey, that property is even appreciated even more. So I'll be coming in and selling that property for around 815 when it's all said and done. So I'm gonna have pretty good turnaround on that property. This is not every situation for me in real estate, nor even close to it. So don't build up your hopes. This is like something that very rarely happens. What's going to happen though for me, I do need capital for my other real estate investing that I will put money into. I want to do a couple short-term rentals that I'll be looking at, but also I will have remaining money. What I'm going to do is I'm going to take that money and up to $57,000 as someone who's technically self-employed, I could put up to $57,000 in retirement, shelter it, and write it off and have my retirement grow. And so what I'm going to do.
Whoa. Bring that one back.
Yeah, cool.
Oof, that.
All right.
So you can't say that so quickly.
So a lot of times, Harold, how we're used to like paying like $5,000-$6,000 on the IRA and deducting it, right?
Correct.
When you're self-employed, you're allowed a lot more. So for me, one of the things I do every year, and the cool thing is you don't have to do this before the end of the year. You have up until you file your taxes to do this, even if you have an extension. And so I evaluate and I'm like, man, I have $115,000 now. I only need 50 to keep my business going. I'm gonna put 50 into my business, but that still leaves me with a lot of money. And I want to drop down a tax bracket. So what I do is I look at my tax bracket, I'll unload another 40,000, knowing that drops me down from like a 32 to a 25% bracket or 24. And I just saved all that money on my taxes. And I didn't buy anything dumb. I actually put my money in retirement. I didn't go out and try to justify a lot of suits or watches. I work with my financial planner. They're either called solo or SEPs, solo 401ks or SEP IRAs. And I shelter money there because then I'm building my retirement to grow from, but I'm also getting a large tax deduction with my excess money.
Now, question. See, I have a question on this one. So let's say somebody is a 9 to 5 employee, but
Yep.
they have a side hustle. How
Yep.
does that how does that play out?
Yeah, it's based on your self-employment income. So you can have a side hustle, and if you have that income coming in, they don't care about your original W-2. You dump it in a side hustle. So
Nice.
that's how I started.
Wow.
That's how I started mine, right? And so I have a lot of money sitting in a retirement account for being self-employed, but I also have minimized my taxes over the year. So not only now that I'm 39 do I have retirement I building since my mid 20s as a self-employed individual, I also know I've saved hundreds of thousands of dollars over tax year over year with my taxes, right? Because I've been doing this for 14 years.
When
And
you
so
know, when you know.
yeah. And so those are things I look at. Now, keep in mind, a lot of times in real estate, we like to make sure we do have liquidity. That's a big thing for us. You just don't cannibalize yourself on your liquidity. Even if you go in and put $12,000 to $14,000, that's still a big tax write-off for you. And
Yeah.
so where a lot of real estate investors mess up, they'll come in and they'll say, "Hey, I really want like, to take, I really want all these deductions," and they'll go buy things that don't really matter. They'll go out and they'll buy like, "Hey, well, look at my home office. I have a $2,000 office chair." Like that's cool and all, but I'd rather have that money work for me, because in real estate, my goal is always interest is always my friend. Interest
Yeah.
could be your friend or your enemy in real estate. Well, if I have
Anything.
investment interest, it's my friend. If I have hard money that I'm having to pay back, sometimes it's my enemy. My thing with real estate is I always want interest to be my friend, not my enemy. So that's my mindset entering into any usual transaction there for me. So cool. So let's
That's a good one. That's a new
yeah.
one I even had. And I'm like, oh, I've been reading a lot, but I ain't reading about that one.
No. Well, yeah. I'm one day. Somebody's like, "You should write a book one day." I'm like, "Man, it's just gonna be rambling of weird stuff that people won't get." It'll be like, I was like, it'll just be so disconjointed because a lot of times Zach has sat with me through multiple Zooms today, and he's like, "Man, I don't know what this guy's gonna say at every Zoom. He just kind of comes and it's always different, always new." I'm not very scripted. I'm scripted, but off the cuff a little bit. Like I've done everything so much that I kind of know what I'm saying. Well, I do know what I'm saying, but it's also something that I make sure that I'm always like, yeah, it all depends on the crowd. Another
Yep.
thing, so with these kind of harder to reach deductions, I just went over that are more advanced. Another thing that's really big here is your active deductions. This is something that like everybody should keep in mind for 2024. In 2024, your business starts, or you can deduct expenses when you spend the money even before your LLC set up. So let's say I come up to Harold and I was like, "I want you to mentor me in November. Here's $100,000." And he's my mentor. I figured for $100,000, he's doing a lot of mentoring for me. But in November, if I pay him at that point, I could take that deduction even before I have a business set up. Because the IRS always look at your intent before they look at really how your business is established. So if your intent was to make money, to generate income, keep in mind that you could still deduct it. With that being said, some of these easy things for me: phones, deduct your phones. Your consulting, if you paid Harold to coach you or mentor you, deduction. Legal and professional, if you use us to do your taxes, we'll write it off. If we set up your entities, we're going to write it off. Any advertising, driving for dollars out there, like beating the streets is essential in real estate. If you're beating the streets, write it off. Some people call it boots on the ground, but I call it beating the streets. So if you're beating those streets, write it off. Take advantage of your mileage. Use something like Mileage IQ. Guys, if y'all are going out with meals, if me and Harold go out for a meal and I'm like, "Let's break bread and talk business," then I'm going to deduct that. I actually learned the other day, I was watching a show and they said breaking bread was a prison term. I didn't realize that's where it came from. I actually thought it came from like Old Testament, but apparently it comes from prison at some point, they
Okay.
said. Yeah, I was like, all right, the more you know. But anyway, if we go and break bread, that is going to be a deduction. My dues and subscriptions, if I'm paying for a lot of softwares, those are going to be things that I deduct.
A
Um,
question.
yes, sir.
No, no, I said without question. I'm deducting
Oh yeah,
anything that's
without question. Yeah,
legal to deduct.
yeah, without question. One last big thing I want to go over. This is important. And Harold, this is something I definitely put up on YouTube because not a lot of people are going over this right now. This is a big topic that I want to cover here at the end for everybody, kind of bring it home. We went over deductions, we went over advanced deductions, we went over entities in the beginning. I'm going to go over entities to close this out, but in an important manner. Guys, the government is getting a little bit more aggressive in how we're reporting what we're doing. That's a little bit different than what it's been. There's a new thing called the Corporate Transparency Act that started January 1st, 2024. I will sound like an infomercial as I say this because I've been used to saying it a lot lately. January 1st, 2024, the government said, hey, we're going to want know a little bit more about you. So they started what we call the beneficial ownership information reports. If anybody owns 25% of a business or more, they have to go in and file this report with a government agency called FinCEN, the Financial Enforcement Crime Network, FINCEN.gov. It sounds scary. It is not. If you have an existing LLC, you must register. If you set up one before January 1st, 2024, you have up to a year to do it. Go into the website, do it, comply. If you don't do it, they're saying the fines are going to be $500 a day. You have a year to do it, $500 a day. If you have a new LLC, if we're setting it up for you, I've been looking all over the internet, not a lot of companies are doing this. We will actually do the reports for you for any new LLCs that we're setting up through Harold's group. This is something that we're including for y'all. We don't want y'all to run any trouble, and we'll take care of it. So with that being said, with what we're already doing, get your entities done correctly. If you have them done in the past, you could contact us. There's a link that I'll post here at the end, a little link for everybody, but you could contact us and that will also help y'all make sure that's done properly. Now, the government says they're doing this. It's not going to affect your anonymity. It's not going to be a public database. The only reason they say they're doing this is to cut down on funding terrorism and money laundering. Yeah, I know, right? And there's certain businesses that are excluded, which aren't usually real estate investors. Your banks are excluded, your CPA firms and your lawyers are three to name. You know, the people who know how to money launder. So they've excluded those. We've been excluded. But every small business owner should pay attention to it. We're seeing the government get a little bit more aggressive with it. It's a lot of information on the internet out there that's bad, but just keep in mind, we will do it for you if we're setting up your LLC. And also, too, like the compliance on it's pretty easy. So if you have an existing entity, you can go to fincent.gov and that will also take care of it. If you do have any questions, they have these little things that say I above every category. If you click on it, it gives you a good definition. But with that being said, I'm going to put a little QR code here in case anybody wants to scan it. So they could easily just schedule a consult with us and we can go over everything there. Also, Zach just dropped it in the chat. So we'll go off the chat, the primepartner.info / Harold Valestein for everybody.
I'm putting it on YouTube as well, so that way you
Perfect
in the chat.
Perfect. Awesome. With that being said, Harold, I know I talked fast tonight. Is there any other thing I left lingering for you or you want me to clarify for the crew?
No. So speaking of which, you speak about good and bad information on the internet. I want people to be clear. So I've seen some things where this individual was talking about set up a trust and then have the trust own the LLCs and this, that, and the other. And I haven't listened to quite things because I have you guys to consult me.
Yeah.
But I'm sure there's other people hearing some of these kind of things. Have you heard anything like that, or is there any validity to these?
There's not validity. There's going to be all these guys who try to get around it with a trust and everything else. Just don't try to get around it. These are people who are usually trying to sell you a trust. Number one, to start off. And so there's not a ton of validity to it. I necessarily wouldn't I've not put any of my things in a trust under this. Now I have existing assets that are under trust and there's benefits for it for myself, but I haven't done it to ignore this beneficial ownership information report. So,
all right, no, perfect. Because I've seen, multiple TikToks, Instagram reels, you name it. And then I get people send it to me and they're like, what's my opinion? I like, look, I said, talk to the professionals. I said, this is not something that I can speak on. One, I'm not a lawyer and I'm not a CPA. So I said, I would advise you talk to the right people for this, but I'm glad I got the right people on to
Yeah,
even give some credence to whatever, whatever
for
they
sure. And I've
are
seen a
debunk.
I saw one last. I watched a reel last night on YouTube, on Instagram for like 3 minutes, and at no point did I leave the conversation saying I learned something. That's all I learned was, man, this guy's really good at scamming. But I learned like this guy says he's done over 200 real estate deals and never paid any taxes. And I was like, well, I got to click on this, and I watched it, and at the end of it, I was like, you gave half truths and nothing else. And then I looked, and that video had 4,700 likes. And I was like, now there's 4,700 bad tax clients roaming the world because of what they learned on this. Yeah, so you got to be careful a little bit about what you watch. I just commented and I said, bless y'all's hearts. And I just kept going. I was like, I ain't going to say anything, but this is not right here. But yeah, so his theory was as long as you 1031, you'll never have to pay taxes. I'm like, no, you're deferring taxes. And he's saying that's a way to never pay any taxes and have all your profits. What's a 1031? You're never realizing your profits because it's going to another property. So I'm like, this guy's just spreading
And then
falsehoods.
if you're and when you leave this earth, if your kids ever decide to sell it, it's gonna be real interesting.
Yeah, yeah. So the kids actually, if you have 1031 and die, a loophole is the kids get a benefit. They get the value of the time of your death.
At the time of death, yeah.
Yeah, and that's what's nice. I would only have a 1031 if I'm going to plan on dying here in the next 20 years. So that's the only reason I do 1031s. Other than that, we're paying that tax, we're getting it over with. Because my maximum long-term capital gain rate is 20%. And most of the time I'm going to fall into 15 on long-term capital gains. Whereas my ordinary income tax rate could be 39.7. So for me, I'm going to always want long-term capital gains because I'm automatically saving points.
Now,
And that's
what capital gains currently now are at? Is it at 50% or 23?
15 and 20 is where you're going to
15 and
most
20.
likely fall. They're trying to raise it. Right now, we're seeing something very interesting on a political sphere. You're actually seeing both sides kind of push for different tax adjustments that actually make sense. So the Republicans are wanting to bring back 100% depreciation, which
Yeah.
helps which helps all bonus appreciation, which helps
Bonus
real estate
appreciation. Yeah.
investors. Yes, which helps real estate investors. Democrats are pushing for more child tax credit, and they're both kind of agreeing on it. So here in about the next 30 days, we'll see some cool stuff unfold to where both sides are actually wanting to give tax benefits for once. So yeah, I don't understand it either. I was reading about it last night and I was like, I had to go back and forth because there's always one side who's like, no, no. I was reading with it last night and I was like, wow, they're both pushing just to give benefits back to Americans. And so it's kind of cool to see it a little bit. And a lot of it will be beneficial in the real estate sphere too. So once that hits, we'll be
Now,
on it.
because I know currently now the bonus depreciation is it's like kind of scaling down, and they're looking to kind of reset it back to where it was. I
Yep.
think was at 100%. I think it's at 80 now, right?
Yeah, it's at 80
Correct me if I'm
now,
wrong.
and then it'll go down to 60, then 40. But right now, they're looking to reset it to 100 and keep it at 100 for a while.
That'd be awesome.
Yeah, it's
That'd be
nice when the
great.
people who make the rules also invest in real estate. That's why real estate has tax advantages, honestly.
Yeah. And if anybody who's watching now, if does anyone have any questions? And then what I'll do, well, the next time we get together, I'll have some people join the Zoom itself. That way we can have
Oh,
some, interactive questions and stuff. Um,
also,
let's see, does
yeah,
anyone have questions? I'm just putting in a chat, see if anybody types anything.
yeah.
No, I think this people will watch this over and over again and be like, whoa, hey, oh, whoa. There's a couple things that caught my, that if I had some hair, my hair would have been blown back a little bit as well.
Man, I did a Zoom to start off my morning this morning, and I'm a fast talker, and
I'm a New Yorker, so I'm used to it.
yeah, I know, right? I know. That's why I like it because I'm like, yeah. He even caught my Jay-Z reference in the beginning. But I had a moderator this morning, and she kept making me slow down. And I was like, for the first like 10 minutes, I was throwing off because she kept asking me, like, making me enunciate more. And then once I got to roll up, I was good. So it's just kind of funny because I like having casual conversations about tax. That's what I'm good at. So when people
Yep.
like want me to be structured, I kind of struggle a little bit. So this morning I had to readjust, and I was like, oh, I eventually pulled it out, but it's just a little bit different for me.
Got you. And then Zach, I know we gave the link. Do we have the QR code just in case we can have it as a visual as
Yeah,
well?
I know Zach gave it to me, so I'm gonna pop. I got you, Harold. I'm gonna pop this up for you.
Yeah, I was
Um,
gonna say, Ryan, you should have it.
yep,
All
I
right,
got you.
perfect.
I'm gonna pop this up as a visual for everybody, and then we'll conclude and let everybody enjoy their night. Um, so yeah, more than happy to do this. Let me pop up in that QR code.
For those who are watching, please, give us a like, let more people learn about this information. That's how it gets disseminated. So give us a little like and follow if you ain't following us already. We appreciate it.
Yeah, awesome for sure. So let's see here. I'm gonna share the screen, and then let's see, can I get this code to pop up correctly for y'all? And then with that code popping up, I mean, feel free just to scan it, pop your phone up there. This will be something that y'all could use. This lets us know that you're part of this specific group with Harold, that we will be doing discounts and everything's for on the entity setup. So make sure you
Oh,
scan this
thank you.
code opposed to going to Prime Corporate Services or anything like that. Scan this code with us, and that will be a good starting point. That'll be a good starting point for y'all.
And,
So I'll
and I
let
can tell
this.
you during tax season, this is gonna come in handy, folks.
Yeah, yeah, it will. Hey, go ahead and get y'all's taxes going now. Get them going for 2024 too. We're about to hit full beast mode. So I'm going to be popping up a lot of caffeine, and me and my 4-year-old won't be watching Peppa Pig too much longer. So, yes, that'll be something that we're more than happy to help you out with. So there's a
And just so
QR
you,
code.
and just so everybody knows, like what's the guy used to say? I'm not only the president, but I'm also a client.
Yeah,
So these guys, they do my taxes. This is who I work with. This is who I rock with. I wouldn't be sitting here otherwise. They've
yeah.
just
Thank
trust me.
you. Yeah, you're a lot like and one thing I like, I'm a big LSU fan. I'm a big Shaq fan. Shaq, when I was 8, I stood in line to have a comic book signed by Shaq, and he was the nicest, biggest person I've ever seen. And so for me, and I still love sports, and I've always loved Shaq. But one thing I watched in a podcast with him the other day, he's like, I don't endorse anything I don't use. And somebody said, you even use that insurance, the general? And he's like, yes. And I was like, wow, that's pretty risky, Shaq. But we appreciate you using this, Harold. So
Yes.
I love that most about Shaq, and I love that too. Like anything I usually endorse is something I'm using. It's nothing that I'm like. So when people
Because I
ask me,
know it. I
yeah,
know it well. I've encountered and partaken of the situation. Now they know earlier before we got on live, I was beating them up a little bit because I got a lot of stuff to catch up on. But they make up for it for me in many ways. So, but
but
thank you again for your guys' time. By the way, just so everybody knows, we're doing monthly tax tips. So at least once a month, me and Ryan and the team will be on here giving different tips, particularly these next few months where it's going to be critical understanding what's going on. And then as maybe you have to file an extension. We'll talk about those things and how that plays out and how to best, maximize those things. So stay tuned. There's gonna be some other lives coming on, but this is one that's gonna be a consistent thing,
awesome.
at least once a month. So
Hey, thank you, Harold. Y'all have a great night, everybody.
salute everybody. Have a good one.